Yeah, man, how you doing? You good? I know you like that.
So for this week's Teaching Thursdays, we're going to cover a new topic today. We hope that some of the previous topics have been enlightening and helping you get your education up in regards to the core basics of stock market and investing side of things. So this week we're going to cover a new topic in IPOs, or initial public offerings. So we're going to start off first with what is an IPO. Well, an IPO, or initial public offering, is simply when a private company decides to issue stock and sell it to the general public for the first time. Now, an example of this would be when a hip-hop artist is announcing they're going to drop a new mixtape or they're going to drop a new album. Now, everybody's like, oh my God, when's it going to come out? When's it going to come out? Because there hasn't been a date yet, but it's just been lingering around. But then all of a sudden the artist says, boom, it's going to drop on this date. And what happens? Once that date comes, everybody is flocking in a frenzy to go get that new mixtape or that album so they can get them tunes and bump it in their ride.
I'm in my old school swinging like I'm Stevie Wonder. They say my wrist don't make no sense. I call them dumb and dumber.
So in their crib, whatever they want to do with it. Well, that's pretty much essentially how an IPO works. It's going to be all this build up for a business that a lot of people know about and want to invest in, but they just never could before. So the IPO simply gives them a chance to get a piece of that company now. So just like when an artist released that new mixtape or that album, now you got a piece of their music and a piece of them in your life.
You gonna eat your cornbread.
So that's pretty much how they work, and that's a good comparison for you. Now, who can participate in the IPO? Well, the participants is going to be, one, the company that's issuing the stock for the IPO, and two, the investors, such as the big name companies like Goldman Sachs and Bank of America, or the consumers like yourself and I that want to buy into the company. So an example of this would be when you have the hip-hop artist who's going to be the company issuing the album or IPO, and then you're going to have the consumers like you and I who want to listen to the music or buy stock in the company that issued the IPO. So next up, you want to know, how does an IPO work? Well, this private company is going to seek out an investment bank such as Morgan Stanley, Goldman Sachs, Barclays, or Bank of America, and they're going to help this company decide what type of stock to release, whether if it's common or preferred. Normally, it's going to be common stock, and that just means usually that the investor has voting rights in the company, as well as what the price of the stock is going to be, how many shares are going to be released, and the IPO date. Now, once all those have been decided, then the company is going to be listed on a stock exchange, and it's either going to be the NASDAQ or the New York Stock Exchange, usually. Now, you can also view our video on stock exchanges that we've done before to kind of get a better idea if you're not familiar with them. Now, once all that is said and done, they're going to release the IPO on that date, and these investment banks are going to get the first dibs. So there's going to be a waiting period.
Keep your drawers on, okay? Just keep your drawers on. The store don't open up for another 2 minutes.
For people like yourself and I to invest. Now let's take the Shake Shack IPO, for instance, where it had an IPO price of $21. Now once that stock was released on Friday, January 30th, all these big name investment banks that either were underwriters or weren't underwriters can now buy that stock at $21, and you're going to see that stock price go up and up and up. But you're wondering, why can't I trade it? Well, it's waiting for the opening trade. So basically that just means once these big time investment banks get their pickings, they're going to allow people like yourself and I, the common man, to get in on the trade. So when Shake Shack opened at $21, all of a sudden once those investment banks took their portion that they wanted, now it's all the way up to $46, which is above 100% increase. And now you have to debate, like, do I want to get in this IPO or not? And so you always have to be wary when dealing with IPOs. They don't always increase by 100%, but when they do, you just might want to be wary about it and make sure that you follow the stock, because a lot of times it'll come down, as Shake Shack has done the past few days. Now, where can you find a company's prospectus? Now, a prospectus is simply a company's business plan or information allowing them to introduce themselves to investors to be put on the secondary market. Now, an initial form is going to be filed called an S-1 form, and it's just basically a preliminary prospectus. They haven't really decided what the cost of the shares are going to be and how many shares. And then the investment bank is going to help this company decide all that information, and then they're going to come out with the prospectus for investors to look at prior to investing in the IPO. This information can be found on the Securities and Exchange Commission website, also known as the SEC, and that site is www.sec.gov. And you can also find other financial information for companies, such as a 10Q, which is their quarterly financial report, or a 10K, which is their annual income statement. Now, when may you invest in an IPO? Well, we've already covered that there's going to be a set date and time, and usually the day before they'll decide what the price is going to be, and then that following day is when the IPO day is going to be. So, say for instance, when Shake Shack had their IPO on the 30th, they set the price on January 29th, and that's usually how it happens. And lastly, why should you know about IPOs? IPOs are not only great for these private companies to generate capital, but they're also great for investors like you and I, or even the big name companies, to get in on some of these companies to have equity in the company, which is ownership. Everybody wants ownership. Do you like Shake Shack burgers and fries? Do you like GoPro's camera?
I do. Ooh.
Well, when they had IPOs, that gave us the chance to get in and have ownership in these companies. Now, how much is, of course, going to depend on you and your pockets, but it at least gives you something, and you're moving in advance in your financial situation, and you're changing your habits. Lastly, IPOs are good to stimulate the economy because it's putting money back into the economy. These companies are taking the money to do bigger things. Particularly technology companies will use money to get more innovative, to buy other smaller tech companies and make them even better. And that's why you see why the economy gets better, and we have, all these advances that's going on. I hope that this video has been helpful to you in covering the topic of initial public offering, also known as IPOs, which is just basically a company's introduction to the world in the stock market so people can invest and get ownership in a company. IPOs are great, but they also just have their risks, so just be careful. Make sure that you always watch out what you're looking at and things, because when you watch TV, even say for instance Empire, Lucius Lyons announced that the company was going to go public and have an IPO on the New York Stock Exchange. Even watching the Jeffersons one day, they mentioned about the American Exchange. Like, there's so many different things about the stock market that are in everyday life that we may not even realize. Even when we go to the grocery store and look at some of these companies, like, oh wow, I didn't know that company had a stock, and yet you're buying chicken from them or you're buying milk from them. So always be wary and find out, like, how can I get in the game? How can I have ownership and build my financial wealth instead of just doing the same old stuff? Now, there's nothing wrong with having some nice things and trying to go, buy items in the materialistic side, but just make sure that you're doing it wisely and that you're getting that money from another source instead of just burning in your pockets from your regular income.
You know you like that. You know you like